Hello everyone, this is Aryan and welcome to Stock Market University. We'll be starting off this beginner's course on technical analysis today on this channel. And as I move further with this channel, I want it to be really a catalog of all the knowledge I have, and I'm currently gaining knowledge myself from various sources. So it should be a pretty expansive base of knowledge, this channel, as we go along, because I'll move from beginner to more advanced stuff in technical analysis and also shed light on some of the uh, concepts and topics I understand about fundamental analysis as well. So if you're interested in the stock markets, yeah, maybe you should stick around and subscribe. Well, let's get started with the basic price action. I'm sure most of you interested in the markets and technical analysis already know this, but just a quick recap that whatever time frame you choose on TradingView, the most commonly used charting software out there, whatever time frame you use, you can choose that up here, 5 minutes. Each candle then becomes a 5 minute candle. It shows the price movement that happened in that 5 minutes. Say this one started at Friday, 24th November on 20:00. It opened at, you can see it up here in the top left as well, opened at 190.87, which is denoted by where this candle starts up here. Since it's red, the opening will be higher than the closing. Opening was 190.87, closing was of course 190.52 on the top left there, and you can see the low created by the wick, which is the lowest point of the candle, was 190.34, and high was near the close. High was near the open at 190.90. That's the basis of a candle, really. And as we move forward, we can also discuss in other videos candlestick patterns. Like a quick example I can show you here, I can see it right here, is you draw a trend line for the daily chart like this, and for the bottom like this here. This is just a random chart. I've chosen Apple for this since it's a popular stock, but I didn't see this beforehand. But you see it's a base here with a declining wedge, which is uh, a bearish candlestick pattern. What you could have simply done here is take a short trade when it's reached the resistance around here, and it would have paid off pretty well. It closed below that and gave a even bigger fall the next day. So yeah, candlestick patterns, but we'll get into that more in depth in other future videos. We move on to, that's the basis of candles. Now, the first and foremost, most important indicator after candles themselves, I believe, is the volume, which is already placed by default when you open up TradingView. The volume, higher volume in any particular direction than the average, is a sign of continuing momentum in that direction, as you can see here on the 5 minute chart. By the way, I'll get into more into multiple time frame analysis, of course, in future videos. But for now, I'm using the 5 and 15 minute time frames mostly, which is good for intraday trading and the such. So the volume. You can see here that there was a selling the previous day in Apple. The closing candles, we saw increasing volume. You can see down here. Let me see if I can zoom in, right? Increasing volumes with selling in these candles. So in next day opening, we saw a gap down and a continuing fall the whole day. The candles in the morning as well were pretty solid volume candles on the last trading day. So recovery in price could not be seen throughout the day. Now moving on to another few basic indicators that you might want to learn about. First and foremost, the most trustworthy, in my opinion, is the relative strength index. Now, It goes in a range from 0 to 100, and when it's above 70, it's said to be in the overbought zone for whatever time frame you're looking at, and below 30, it's oversold. Now, that alone, it can give you a decent recommendations, but they don't always work. More important are the bearish and bullish divergences that form on this indicator, which are basically where the gold's at with this one. I can spot one right here. Divergence is basically when the indicator and the price move in opposite directions. Happened right here. This is a bullish divergence. We didn't see that much of a move again because of the big selling pressure volume, but you can see we got still a decent up move throughout the day. And considering the volume here and the closing candles with some green bars, and considering I'm expecting positive momentum tomorrow on this stock. Now, moving on to another, let me just clear this stuff and add the volume back because honestly that should always be there. Moving on to another very important basic indicator is the, you can use the triple EMA here, but I personally use the EMA 20, 50, 100, 200. It's a pre-made community script. You can easily find it. So what the 20, let me delete these drawings. What the 20, 50, 100, 200 does for you, it gives you an idea. Here the red, of course, is 20, orange is 50, light blue is 100, dark blue 200. Now if you can see these, let me actually darken these a bit so you can see them more properly. City. Bear with me. Alright. So EMA 20, 50, 100, 200. Now if they're all in order as in right now they are, because they're ordered for the negative side. What I'm trying to say is, see, the biggest number 200, dark blue on top, light blue 100 below it, orange 50 below that, and red 20 even below that. So for this whole day, after this crossover here happened between these EMA lines, the stock turned bearish, and we saw the results playing out here the very next day after the crossover. And when the crossover happened here, there was a huge gap up. Didn't quite sustain, but still there was a uh, huge price action here seen after the crossover. Now, of course, this is the 5-minute chart, so there is some volatility. It might not always work. So actually, let's move to the 15-minute for a more accurate picture. See now, here we've gotten a pretty huge move with these being in order in the positive direction. You can see 20 red up top, orange 50 below that, 100 with the neon blue, and 200. They're all in order of magnitude, meaning that the smallest EMA is top, followed by the bigger one, bigger, and then the biggest. Now, what an EMA really is, if you want to understand the basis of it, it's basically the 20 EMA is approximately an average of the last 20 candles of whatever time frame you're looking at. Same with the 50, average of the last 50 candles, 100, 200, so on. That's the basis of the indicator. So when price is above these lines, that means people who've bought in the last 200, 150, 20 candles are currently making money. So they have incentive to ride their positions, and they also have the opportunity to make bigger profits as we see here. So they usually, the bigger players, when they're in a winning position, like a lot of people were here because of all these candles coming up here, and the people who shorted the market for Apple when it was below these lines also now are in loss. So it all points to the share going up. But we'll get into these indicators a bit in depth in later videos as well. I don't want to get too much in depth in this one. So as I was saying, I don't want to get too in depth in into the indicators in this video just because I don't want it to be too long. And whenever I do talk about the indicators in depth, I wanted to cover each and every topic and caveat within the indicator, why they work, what they're based on, what are the different divergences and combinations with other indicators maybe you could find with them, and all of that. So I'm just going to talk about one more indicator, and the ones I've shown you today are the basic ones which I almost always use in some form or the other, in some combination or the other, to take my trades and all of my different strategies. So moving on to the final indicator for the day is average directional index, or the ADX. The ADX. Now on its own, ADX is not that reliable because it differs for every stock and different markets and indices. For some stocks, it being above 25 is a sign of good momentum. For others, it being above 30, which seems to be the case for Apple, is a sign for good momentum. But to get a clear signal from ADX on every stock you want, what you can do is click the three dots here next to ADX, and what you want to do is just add an indicator on top of it. Just type EMA here, moving average exponential, this one. Go to the settings on the EMA that's on top of the ADX, change the length to 70. Alright, now when you do that, a blue line will pop up here, and whenever the ADX goes above this blue line, the ADX of course is the red line, you can be assured that whatever momentum is happening in the markets will continue for a while. Now see here, it was bearish momentum, stock was going down, ADX went above 30, stock continued going down. When the ADX starts going back up, back down, you know the momentum is about to end. Of course, like I said, I'll move on to talk about these indicators more, their different combinations, the strategies you can make out of them in future videos. But for this one, that's about it. So thanks for sticking to the end. Let's learn about the markets together. Please like and subscribe.